All right, this is Mega Profit. I've been able to introduce the centralized change to us and the keys on the dashboard and their functions. Okay, right now I'd like to teach us how to use the spot trading and future trading, how to use them and trade successfully. How to use the spot here you can see, and that of the future trading, how to trade with them successfully. Both of them are not the same. Okay, they have similarities, but there are things that differs in using them. Now the chart. So here is what we call the candlestick chart, and in this place you can find your different time frame. This is time frame, 5 minutes, 15 minutes, as the case may be. You can put in any time frame you want. Look at it here. So these are the ones I chose. You have daily, you have 1 minute, after 12 hours, 3 days, 1 week, 1 month. You can choose any of your favorite. Now we can also use in your indicators or tools. You can see tools here you can place in. This is your Fibonacci retracement. This is your trend-based Fibonacci extension. This is your pitch cut, the sketch pickford, the modified skiff pitchfork. You have the inside pitchfork. We have the Fibo channel, we have the Fibo time zone, and all the rest of them. So it depends on what you really want. Now here is the search bar where you can change the Bitcoin. This is Bitcoin. So I can actually place, say, Solana. Solana is so I place so. I want to see the chart for Solana and see how I can trade Solana for an example. Now you will see Solana is changing. You will see the chart will soon reflect to this place. So as soon as it reflects, we can use it to learn how to trade. Now before the chart changes, let me also tell us here we have this place. Now the difference between the spot trading and the futures is this. In the spot trading, you can buy, but you cannot sell. So the sell you are seeing here is known as close. You can only buy and close. Buy and close. This is your buy. When you buy, for example, let's say we are buying here at this level. Okay, let's say we are buying at this level. At this level we buy, and as soon as price, this level here, we are buying here. Now when price get to this place, okay, let's say price get to this place, we sell. So what's the price for here? You check the price for here. What's the price here? You check the price. So when price gets here, you sell. So what it means is, so you place your limit order. So now it's not price. This is price. This is the calling for price. You place price of where you are buying, which is here. So you place it here, and this is the percentage you are buying. Here is your assets. Okay, the so. Now, how many are you buying? So you can buy 25%, you can buy 50%, you can buy, these are the percentages you are buying. Okay, this is 25, this is 50, this is 75, this is 100. You can buy the whole of your assets. Then also you can also use your instant market execution. Instant market execution means I don't need to wait. This thing I've already bought is almost going to my place of target, so let me just buy immediately where it is. It's called instant market execution. So what you do is you draw, make sure it is at market. So the difference is this one is an order limit. You buy, you can just buy anywhere you think. When price get there, you buy. So you just copy the price of that place. Let's say I want to place an order maybe by tomorrow that Bitcoin will come down to 94,300. So I place an order for buy limit here. Order 94,000. Sorry, I said for Bitcoin, yeah. I place that order there. So when I place that order, when price get there, it will just buy immediately. That's for limit order. But for instant market execution, you are just buying where price is. Okay? And when you buy, immediately it triggers the market. You just jump in. You are jumping in. That's what the instant market execution is all about. So here remains the same. And before you place your order, you check, are you buying with the total of your ask, the money you have, the dollar you have? Are you buying with your 50%? Are you buying with 75%? Are you buying, you can just buy with any percentage that you really want to use to buy. Then another thing we need to learn is here, if you are buying, this is the last key you click. When you click here, it's assuming I have money here, you will be seeing the number of what? The amount of money I have here. It said available max. You'll be seeing it here. So in USDT and in what? In SOL. So here is USDT, that is United States dollar theta. So you'll be seeing it here. So how much you are buying with, you will see it here. When you draw this, scroll this key to any level, you will see how much you are using out of the total max that you have here. And when you click here, it will pick the using your dollar to buy the Solana, and you jump in the market. Then maybe price is getting here and you don't really want to trade any longer. You can't place in a limit order. You can just jump into your market and closed immediately. So you just, your close here for spot trading means what? Sell. Spot trading means sell, to close from the market. So you can only go in one direction. When you click, when you scroll, you click sell. That is, you close. You are closing. You are going out. You no longer want to trade Solana. You are now converting your assets, your Solana, into your USDT. So that's what it means. Now I want to take us to the future trading. I want to take us to the future. All right, like I said, in future trading, the future trading is different from that of spot trading. Now you can see here we still have the same charts. So the chart is common. The chart on spot trading and that of what? The futures. Now in futures, the trading and the manner, the way we trade are not the same thing. Now, for it, you can look at this. Let's look at you see we have isolated here. We have isolated, we have cross. Okay, now all cross positions under the same margin share the same assets across the margin balance in the event of liquidation. So assuming you are using cross, if you are using cross, if you have money in your spot trading and you have limited money and the trade is against you on your futures, it will go across your futures and start using that of spot trading. Okay, so that is why, or any other of your account in the exchange, that is why we prefer to use isolated, except maybe the trade is against you and you think it can no longer go beyond that area, you want to support it with a fund, then cross will be good for you. But I recommend people using isolated. Isolated means if you're putting $1,000 in futures, it remains that $1,000 in futures. So if you have like maybe $5,000 in your spot trading, it will not affect it. Okay, so we said isolated, confirmed. Okay, we say isolated, confirmed. Then another thing we need to look at is leverage. Leverage. What is leverage? We all know what leverage is all about. So in this BTC perpetual isolated, we have the 1x, the 2x, the 3x, 5, 20x, 30x, 50x. See the scroll arrow here, you can extend it to 100. So, but the recommended, because what we have here at the leverage is the more the leverage you use in trading, the more money you make, and the more losses you also make each time the trade goes against you, or you make any mistake, or there are errors in your forecast or your analysis. And when you trade, when the trade goes against you, then it will liquidate. It could liquidate your account. So that is why we look at a very good risk management in trading before we begin to trade. You can make money always, but when one particular one goes against you, it can liquidate all the money you have made. And that is why it is good to maintain a very good risk management. So I recommend 10x. Using 10x, you know, don't use 20, use 10x. 10x is okay to use. So we use 10x. Now, after using 10x, we can, I explained this in spot trading, your market, instant market execution will have the limit orders where you can place order even when price haven't now gotten to that place and you think it will get there and you want to or buy or you sell. Now, buy and sell in spot trading, buy means you are buying, then sell means you are closing. But here in futures, buy, you are taking the direction of the bulls. Sell, you are taking the direction of the bears, that is the sellers. So it works like the way the forex market works. So you have the buy, you have the sell. So assuming price gets to this place, you want price to go down, you think price will go down, you sell. If price goes down, you'll be making more money. So you are among those bears who are, or sellers who are pushing price go down. So, but if price continues going up while you are selling, it means you'll be losing. So that's how it works. So when you placed, let's assume that you placed, let's say Solana, okay, your search bar, you said Solana, okay, so, and assuming so comes out, I think network is actually disturbing, so comes out, you click Solana, okay, then Solana is coming up. So this is the chart for Solana here, right there. This is Solana. So let's now scroll. We want to trade Solana. So when you enter the number, of course, your asset is already here. So then you'll be seeing your asset. You'll be seeing it here at the portion available max of USDT, which is your asset, your dollar, will be available here. Then you place your buy. So are you buying 20%, 25%, 50%, 75%, or 100%, or the totality of your assets? If you're buying with all of them, you have to use the scroll and you take it this way. Then if you're buying or selling, if you're selling, you place your what? Your short. You are shorting. So in spot, in futures, we call it short. You're shorting. For in futures, you buy. Then stop loss is also important. I want to talk about the stop loss, which we use to regulate our risk management. We use that to regulate our risk management. So very, 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 very important. So we'll have to look at the stop loss. So stop loss means if you're buying here, you put your stop here. Okay, your SL, the price here, you put it here. So that when it gets here, let it take the little money so that it will not liquidate the totality of your account. Then your TP, let's say you enter here and you want, it goes here, you want it to take you out. So you place your TP here. So these are how you can buy.